Potomac Wealth Advisors President Mark Avallone on whether this reaction is justified. It's not too surprising to me, Mark, we're seeing this type of reaction, but it does raise questions about China. Of course, China just signed this trade deal with us, and now concerns about whether this is going to make good for them to make good on that. It seems like people are freaking out here, but your sense?
Well, there could be, and it is already a human tragedy, so that's what the fear is, that it could spread. China GDP is going to get hit more than ours, and with this Phase 1 trade deal just having been passed, it's really a missed economic opportunity for the entire Asian emerging market regions to celebrate or kickstart an economic resurgence into 2020. That was a lot of the baseline forecast. It was ours that emerging markets were poised to have a good year. But you mentioned travel. That's going to be suppressed by a depression in travel, amusement parks, theme parks, hotels, airlines. Even shopping malls could eventually have economic activity suppressed if the fear of this persists. Remember, whether or not it's as serious as feared doesn't matter if people's behaviors change. And that's what I think the market concern and the market risk is now.
No, I think you're right. I mean, just the fear of this has been walloping travel industry stocks, airline, hotel stocks, those with exposure to Asia, those with even limited exposure, virtually no exposure. So it's getting everyone caught up in the downdraft. I mean, obviously you have to get proof that this has escalated or has gone up to even a SARS level crisis, which it's far from being for the time being. But how do you play it? What do you tell investors?
Well, if you're long-term, I think it's too early to bail out right now. A couple of thoughts are, you mentioned oil prices earlier. What concerns me more about oil stocks is the debt. The high-yield market is heavy into energy, and one of the 2020 risks we were looking at going into 2020 was potential weakness in the bond market. And with all the energy debt out there, somewhat largely price-dependent on a barrel of oil, this suppression in travel is weakening oil prices, and that could be a bigger risk if the high-yield market falls or at least weakens. So that's a big risk. You know, if you are an optimist in this and you're thinking that this is going to pass, the CDC and others are going to get their arms around it, this could create the correction that a lot of investors who are heavy in cash are looking for. Remember, we've had a virtually uninterrupted market since the fourth quarter. So if we have a little pullback, the economics look to be intact, and this looks to be contained, it might turn out to be an entry point for a lot of investors.
I'm just wondering, to kind of address what you said at the outset, that people will use this to take some profits. I don't want to be crass about it, but they might find, all right, this might be a good excuse to sell right now, not leave the market, but just leave for a little while. What do you think?
Well, I think in some cases it's prudent to take some money off the table. When we had this virtually uninterrupted run-up, a lot of individual investors especially were a little bit out over their skis, and they were looking to get out. I'm getting calls for folks saying, hey, what day is the market going to drop, as if anybody really knows. And yet this could be the catalyst that gets the greed equation replaced by fear, and the fear may overwhelm the greed at this point, and you might see, and especially if program trading kicks in, Neil, if we start seeing some of these triggers where the algorithms say it's now time to sell, you could look at wholesale reductions. You know, given the market cap weighted of these indexes and these ETFs, stock picking is going to go out the door if we see that.
No,
so
right.
You might see a momentum trade, and that's what could create the opportunity.
Well put, and a very good step back historical kind of advice as well. Mark, thank you very, very much. I appreciate it.